Alright, what's good everyone? It's Fearing. It's currently July 20th, 2025, and here's the lesson on validating lower time frame narrative when it is against the higher time frame narrative. This is going to be a crucial lesson to understand because this is a huge aspect of how I overall gain my bias and overall drawing liquidity directly going into New York Open many times is how we determine whether or not 930 is going to be manipulation or distribution. So before we move on, you have to first understand a few different concepts, all of which you should have already watched all those videos, but nonetheless we want to repeat ourselves. You want to watch significant highs and lows, significant SMT to significant high and low, and the sequential SMT lesson. All those should be understood in depth before we can move on. Additionally, it's crucial to understand the overall fundamentals of market maker models and Power 3, as well as overall dealing ranges. So now we can move on, go watch those videos, go learn those concepts if you have not already. So first, introduction. So there's two variations of how I can validate lower time frame narrative once against higher time frame narrative. This is variation 1. So the first step with this is overall understanding higher time frame narrative. We have to understand, is the higher time frame bullish or are we bearish? Let's just say in this example that we are bullish, because more often than not higher time frame is very bullish. Nonetheless, we want to cover this. So higher time frame narrative, let's just say it's bullish. Next step is going to be identifying, is there SMT at the lows to support that bullish narrative? Yes or no? If there's not, but there is SMT at the highs, then this is where this concept can apply. Let's say that the higher time frame is bullish. We have two stage sequential at the highs. We have no stage sequential at the lows. Boom. Immediately then we can have a bearish bias, at least short term. Why is that? Because we understand that in order to support that bullish narrative on the higher time frame, we first have to have that bullish sequential SMT to then support price to expand higher. Now, when I specifically say this, I am specifically referring to price within the daily Power 3. Because as we know, we look for new sequential SMT within each daily Power 3. Obviously, when it comes to something like a monthly cycle, quarterly cycle, sometimes even weekly cycle, we can kind of ignore, or we kind of ignore that, and we of course can apply that to having a bullish narrative. But when it comes to within our intra daily Power 3, we want to see some sort of new daily cycle, potentially even a new weekly cycle, a new 90-minute to then support price to expand higher. If we don't have that, we can't necessarily validate price to seek higher prices because there's no sequential SMT, and then we know that sequential SMT starts strong moves. So we can immediately give ourselves a bearish narrative if this concept applies. So as you can see here in this reference, we have SMT at the highs, and I'm just going to pull up my trading view chart so there's no confusion. As we can see here, this is directly going into that day on the 15-minute time frame. So directly going into the 15-minute time frame here, directly going into 9:30, or I guess we'll wait until 9:30 opens up. We can see that 9:30 opens up, we form SMT with the pre-day high, as we can see right here. Additionally, the previous 90-minute high, as we can see when we zoom in on the 5-minute time frame. As we can see, Q3 on YM fills around the Q2 high. So we have weekly cycle and 90-minute sequential at the highs. Now, that wouldn't matter because higher time frame narrative is bullish, but what does matter is the fact that we have no bullish sequential SMT to support the longs. As we can see right here, all three indices at the lows in terms of sell side are all in sync. There's no sequential at the lows. We have failed to run out the pre-day low, so we have an inducement below the pre-day low. All of which what I'm saying is that there's no sequential at the lows, nothing whatsoever, and there's two stage at the highs. So that immediately can point us to have a bearish narrative. Now, for some overall context in regards to the higher time frame, we can see very clearly here that we're within a daily market maker buy model. So overall, we want to look for longs, but short term, we can validate price to seek out lower. And that is exactly what we're going to do on this day. So going into this day specifically, you have two scenarios. You can either look to get in shorts, fade the higher time frame narrative short term until we can form that bullish sequential SMT, or you can just sit out, wait for us to drop, then get in for longs. But if you know that this is going to happen, you might as well get in. You might as well catch the trade because you know what's going to happen. Anyways, in this reference, we're overall covering the trade I specifically had taken, and this was this position on June 2nd, 2025. As we can see, I took shorts from high day. Let's also break down the confluences. So we had 2-stage sequential at the highs on the 5-minute time frame. We had a 5-minute PSP swing divergence, as we can see right here. And NQ and ES filled around the previous 5-minute high, with aka the PSP high. I should specifically state that it was this high and low, this high and high that had the swing divergence. So the 930 high gets souped on ES and NQ, then forming a PSP. That then confirms a reversal. Of course, my entry model, we want to find some sort of lower time frame confirmation, such as a 1-minute entry model. So this reference specifically, and this isn't my normal entry model, but this is what was granted to us specifically on this day. So on the 1-minute time frame here, when price had closed, that 5-minute PSP, was confirmed. We can see on the 1-minute time frame that we had a 1-minute inversion. What's special about this inversion? Well, it's an SMTF. There's no fair value gap at 938 on YM. We trade into that inversion. Now, the whole reason we're even looking at this is because we're failing to have a 1-minute CISD. My whole logic with this was that even if price was going to sell off here, or it wasn't that, it was that I don't like how prices and it's just wicking right above the CISD. I'm afraid that price is potentially just going to, accumulate right above the CISD out of nowhere after, potentially delivering out of this 1-minute inversion SMTF. We just have a massive candle lower. Because again, keep in mind, higher time frame narrative here is bullish. We would not be surprised to see super strong manipulation super quickly so that price can quickly hurry up, reverse, and trade higher. So we want to be very, very careful here. What I'm getting at is price trades into that 1-minute SMTF inversion. We form a 1-minute swing divergence inside of that SMTF inversion right here and here. And then I specifically entered off of the next 15-second CISD. It's not going to let me go back all that way in time, just because that was a little bit ago, just last month, but it's not going to let me go down the 15-second time frame. Anyways, what I'm getting at is that was my entry, and as you can see, look at what price does. We get that initial sell-off, and what do we do at the end of that sell-off? For starters, absolutely great move. How you enter there off that 15-second CISD, roughly around there, you were able to catch a 180-point move. As you can see, what price ended up reversing off of was in fact the fact that YM had manipulated all the way down to the previous day low. As we can see right here, we run out the previous day low, forming weekly cycle sequential at the lows. On top of that, we ended up forming daily cycle sequential SMT at the lows as well. So we had weekly cycle, daily cycle, as we can see right here and here, here and here. On top of that, we also had just additional confluence. We also had 90-minute hidden sequential SMT, as we can see right here and here. Wherever the Q2 body low is, probably right there. So, boom, 3-stage sequential at the lows. This is our higher time frame narrative in play. Again, keep in mind, our goal with this overall concept is not to catch the daily distribution. It is to catch the manipulation. That's the whole idea with this concept. It works well because we know that in order to even validate higher time frame narrative, we have to have sequential SMT. That is not present. We're not going to see higher time frame narrative play out until that sequential SMT is present. So that is why this concept works so well. So that was version 1. Now we get into version 2. I'll wish you guys to read a little bit right here. So version 2 overall utilizes the exact same concepts, the exact same idea. The overall difference is that instead of, well, I guess in this scenario, we can actually have sequential SMT at the lows when price is bullish, but it utilizes ranges. So instead of, highs and lows not having SMT, is instead ranges being unbalanced. So this scenario, higher time frame narrative is bullish. Everything is pointing bullish. We're again in the higher time frame market maker buy model. However, directly going into New York Open, as I'll pull up on my chart, directly going into New York Open here, as we can see, again, keep in mind, everything is bullish. Higher time frame narrative is bullish. We're now trading at past all-time highs at this point. Everything is bullish. What I'm getting at is that directly going into New York Open, how are we going to play? How are we going to be in line with that bullish narrative? How are we going to be a part of that? Well, logically speaking, even if we do want to play longs, even if we do want to be a part of buy side delivery, we first have to get an optimal entry within discount of the range. because at this point, directly going into New York Open, we're not really presented anything too clean. Now, initially, we were possibly looking for an earlier retracement, but what really confirmed that price was going to retrace back into discount, allowing us to catch shorts, was the fact that 930 opened up and immediately displaced higher, leaving us no manipulation lower on any index. Every single asset just straight pumped higher. This is giving us a clear Judas. And what do we see at the end of the Judas swing? Well, at the end of the Judas swing, we can see that we run out the previous week high. As we can see right here, when I zoom in just a little bit, we can see that NQ, well, the next candle, runs out the previous week high. ES fails to, YM fails to. So now we have a monthly cycle sequential SMT. Now, to confirm the monthly cycle sequential SMT, we can see in fact that we have a 4-hour swing divergence, as we can see right here, giving us the validation to drop down to a 15-minute. Now we're on the 15-minute time frame, and what do we see? Well, chances are you probably have not watched Halo's open close divergence video, so I'm not going to go into too much depth on that just yet. Actually, you might have. This video might be going after that one. Who knows? I don't know where I'm going to put it yet. But in the most simple aspect, we can see at the high of the range that we form a 15-minute PSP swing divergence. Because as we can see right here, this 945 candle is a PRC on NQ, it is a PSP on ES, and it is a PSP on YM. And Q soups that PSP, or that PRC on NQ. We fail to soup the PSP on ES, we fail to soup it on YM, and that then forms a new 50-minute PSP. That can then validate us to drop down to a 1-minute time frame. Now, again, I don't know if you watched the open close divergence video yet. If you have, then you know exactly what you're looking at here. I don't want to bring in too many other advanced concepts in just one singular video. So if you have watched this, you know exactly what is present here. If you have not watched it, well, go watch that, then come back to this video and then see what's present here. If you notice that, that adds a lot more probability here. So now we get into the actual trade that was taken. So everything we just listed below, we understand at this point that even if we are going to play longs, because of course high top from there is bullish, we want to be in line with that. Even if we are going to play longs, we first have to, well, return the discount. And why is that? Well, in the most simple aspect, price isn't just going to go up forever. There's certain stages of how market delivers, and we don't just go on higher and higher and higher forever and ever and ever. No, there are times where price must rebound, and overall how the day has delivered so far, with the fact that there was no sequential SMT directly going into New York Open. Obviously we had that daily cycle, but keep in mind that was directly at lower day. As of now, there's no new sequential SMT to really support this move higher. And even aside from that, we have to think logically, if we're going to get a long entry, it would be within discount of the range. So that is our entire focus going into New York Open here, or going into 10 a.m. here. Our focus is for price to rebound below us before we can even catch longs. So going into this trade, based off everything else that is in line here, we can validate shorts. Again, we're not just looking to short just because we have unbalanced range below us. We have all those other confluences lining up to then validate it. My specific entry, well, it was off of that. I apologize for going in and out of the Canva and the trading view, but my specific entry was the 1-minute CISD. So my specific entry is right there. Now, what overall led to it? Well, again, we'll repeat ourselves. We had the monthly cycle sequential at the highs. We had the 4-hour swing divergence at the highs, the 15-minute PSP swing divergence. That validated us to drop down to a 1-minute, and simply on the 1-minute time frame, all I did was enter off of the 1-minute CISD. Nothing special, that is all. There was additional confluences here to find a earlier entry, but as you guys know, I like to just keep it simple, strictly focus on CISDs, and that is exactly what I had done here. So my specific entry, actually, apologies, this trade was a little bit, not too long ago, but it was 2 weeks ago, kind of forgot. I actually entered a little bit sooner. I specifically had entered off of this inversion right here. Now specifically, it is a SMTF inversion, just like the last trade that I showed you guys. I specifically entered off of price inversing these two for value gaps, specifically just due to all the confluences that were aligning here. and that actually gives me a lot better of a risk reward. But anyways, as we can see, directly going into that inversion, we formed a 1 minute swing divergence here and here, specifically a 1 minute PSP swing divergence. And I'll make that simple, mark it out for you. As you can see, the 1016 candle on NQ is a down close, up close on YM. We soup that candle on the next candle at 1017 on YM. We failed to soup it on NQ. So seeing that directly going into the inversion of that SMTF, that made that a high probability entry prior to the CRSD. Normally I like to wait for CRSD entries, but very similar to the last trade where I was scared with price accumulating right below, pretty much just accumulating right above that CRSD. I was scared we're going to get a super strong candle like that, just sell off, because again, high time from there here is bullish. So I was a little bit sketched of that. That's kind of the main reason why I got an earlier entry. But anyways, that's just an overall breakdown of that trade. So as we can see, price ended up seeking out EQ, and from there we zoom out a bit, we can see that we did start to trend higher. So again, this is simply short-term narrative to validate. This is simply validating short-term narrative, lower time frame narrative when it's against the higher time frame narrative. You don't want to be in these positions too long. Once we form that validation of price continuing the higher time frame narrative, such as bullish sequential, rebalancing the range, you want to get out of your position. Don't go for too much. Simply aim for what you entered. Simply aim for the whole logic of why you entered. If there was no sequential at the lows, only aim for that. Once price forms bullish sequential, sell your position. If you entered short, if you're fading higher time frame narrative because we have unbalanced range below, don't hold longer than EQ the range. You have to be logical with this, because keep in mind, the biggest aspect of our trading, the easiest way to add probability to our trading is to be in line with higher time frame narrative. So don't fade it for too long. This is a very short-term concept. You don't want to, abuse this. Anyways, if there's any questions regarding anything I covered, just reach out, let me know. Overall, that is the lesson for today. I'll catch you guys all in the next one.